Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. We have lots of queries which have come in and we have our guest joining us. We're going to take us through both of that, through all of the queries that we have planned. But first up, let me run you through what's going on with the markets. For now, we've actually seen quite a drop in the past 30 minutes or so. So right now we're trading with a gain of just around 0.2%. From the highs of the session, we've lost around 50 points. But what's encouraging and what's, really looking good is that the broader markets are doing a lot better today. So the mid-cap index will come up for you. And that one is seeing a gain of almost 0.7%. That is looking quite good. It is really the real estate stocks, the PSU bank stocks, which are leading the market higher. Some of the metal names also coming through. On the downside, you have a little bit of the, FMCG and consumption plays, which are seeing some cuts. So that's what's going on with the market action. We do have that big Q tonight. So maybe a little bit of a wait and watch mode ahead of that. But let me invite our guests on the show because like I was telling you, we have lots of queries which have come in. So Kush Bohra joins us as well as Parthiv Shah, who's director at Tracom Stock Brokers. Kush as well as Parthiv, thanks a lot for joining us today and taking out the time to, take all of these queries. I'm going to get straight to it. The first one comes in from Revant. He writes to us from Kerala and he says he has 1,500 shares of Titan, which he bought at 10 rupees a share. He's a long-term investor, no doubt about that. But he wants to know now whether he should hold or sell. If Titan was at 10, this must have been in the early 2000s is what I'm guessing. Parthiv, let me come to you. First, you have to give it to, the patience of investors like this who can just hold on to a stock and reap the benefits. So, of course, congratulations to him on the money made. But from here, what do you think you should do? Should you continue to hold a stock like Titan?
Has been for the investor. I would say he's been like a mini Warren Buffett of India, which is Mr. Rakesh Jhunjhunwala, because Titan again was one of his favorite stocks and did extremely well for his portfolio. But the thing to notice is that this gentleman was a very early entrant. Probably I'm very sure he must be having a good hand of the company and its fundamentals and the business model. And it's been like in case of Titan that the business model is shaped over a period of years. It's not been that it had a fixed business model. It entered the jewelry segment, it was into watches, it entered into the eyewear segment. And I'm very sure such an investor who holds a stock like Titan for so many years would be a very wise investor even reading the annual reports and attending the annual meetings. That gives the conviction to all the investors. So the advice and the key takeaway from such investments is that definitely I think such companies you have to keep an eye on, you to monitor. You can't just buy and forget. The times are of buy and review. And talking about the current scenario of Titan, I think great days are ahead for it. This is a company where we always feel that by 2025 there is immense potential to touch a top line of around 50,000 crore. And the way they kind of market themselves and their brand equity is so strong in the jewelry segment. And we're getting a lot of data points about how much of money is going to spend on the weddings in this wedding season. I think Titan is going to be one of the biggest beneficiaries. Despite the fact that on the trailing multiples, the stock is pricey, no two ways about it. But looking at the growth trajectory for the next 3 to 4 years and the investor having appetite to hold on to such stocks, certainly this is a stock to hold on.
Certainly, this is stock to hold on to. In fact, this is something we've been talking on the show about so much as well, right? That this whole jewelry season is coming back. In fact, just the revenge spending after COVID, it has to augur well for companies like Titan. Kush, I know that you are going to, do a technical analysis on this, so take us through that. But of course, this is quite an exceptional case of, an investment gone very, very right.
Oh, absolutely. And on a lighter note, I want to know what he's buying today or whatever he's buying next, right? You're absolutely spot on. I can't give him anything more than congratulations. But from just a technical standpoint, 2,400 is where the support is. I won't be surprised if the stock goes above 3,200 in the coming year. So continue holding on.
Okay, continue holding on to Titan. That was an easy one. Both of our guests agree on that. And congratulations on all of that money made. But moving on, now we have Makesh, who writes to us from Trichy in Tamil Nadu. He holds 3,000 shares of Yes Bank purchased at 50 rupees a piece around 4 years ago. He's a medium-term investor and wants to know whether he should hold or sell. Today is a good day to talk about Yes Bank. It is down today. It is in focus because of that. But, for the past couple of months, it has been doing very well. So let's pull up those charts. For the past 5 days, it's still seen a 30% up move. If you look at a 6-month chart, also it's up around 80%. Kush, coming to you on this, because for this, I'm sure the chart has been exciting to track.
And how? I mean, I'm sure so many investors and traders are very excited to look at this kind of move in Yes Bank. My only concern is that the supply on this stock is going to be immense at multiple levels. So that's why I can't recommend a fresh entry. But since he's holding on and his average price is 50, my suggestion would be that all these kind of bounces that you get, keep exiting at lesser losses than what you would have at prices of 14, 15, and switch to something like an SBI or an IndusInd Bank. These stocks in the long run are expected to do much better. So what I would do is, all these bounces, I would take them as an opportunity to exit.
You can use these bounces as an opportunity to exit the stock. Coming to you, Parthiv, on this one, it is lower after it announced that final deal with Avendis as well as Carlyle. What do you think of this stock from a slightly longer term perspective?
Pavitra, I'm glad you brought this stock because, I think a lot of retail investors feel that at 22 rupees is a damn cheap stock. But one has to understand the fact that over the years of restructuring in Yes Bank, the equity capital base has been massively diluted. So probably somebody thinking that the original purchase price was 200 and right now it's 22. If you look in terms of the market cap and the book value, probably they are at the same juncture. So that is something investors need to understand. No doubt, I think I must give full credit to the government institutes and the government and RBI for bringing in a fantastic bailout of Yes Bank. And eventually we also saw that the bad asset loan got sold to JC Power, and that was a great deal. But I think Yes Bank has had its share of good run-up. The stock has rallied massively from levels of 14 to almost 22. And this is the bank which is now currently based on its current assets sitting at around 60,000 crore worth of market cap and a forward price to go particular 1.5. And in this scheme of thing, I think we know in the banking sector, there are a lot of digital banking plays and there are a lot of mid-cap size banking plays which are still quoting at one-time price to go multiple, having great asset quality, great ROE, great ROA, very low credit cost. I think there are better options here. I feel that Yes Bank has had its run, so it will consolidate till more results emerge and how the next growth trajectory takes place.
All right, that is the call coming in on Yes Bank. The next query comes in from T. Velavan, who writes to us from Tamil Nadu. He holds Restaurant Brands Asia. This is earlier Burger King, which was, that's what it was called earlier. He has 200 shares at an average price of 158 and okay, there's something definitely wrong here. It says 32 years. He's a long-term investor and he wants to know whether he should hold or sell this stock. Let me come to you first on this, Parthiv. What do you think about Restaurant Brands Asia, and do you think that there's significant upside that he could realize in a couple of years?
See, Pavitra, we are upbeat on the QSR space, and no doubt, I think Burger King as a franchisee. And one good thing about investing in this particular name is, they don't have multiple franchisees like a lot of other people have. Like in case of Yum Foods, we know that they have multiple franchisees. Devyani is one, Sapphire is one. But yes, I think I'll agree with the fact that in terms of the same-store sales growth and in terms of the margins reported, I think Restaurant Brands Asia has been a laggard. And that's the key reason why, despite the fact that the entire QSR space has been buzzing, whether you talk about Westlife, which houses the McDonald's franchisee, or for that matter, Devyani or Sapphire Foods, I think all have done extremely well. Even for that matter, Jubilant Foods has done well. So my suggestion is probably it's better to switch into some other name. And currently, we do like Sapphire Foods. I think the way they are projected to grow, and in terms of newer additions in terms of the stores, I think we believe that will bring better returns for the investors over the next 2 to 3 years.
Okay, let me also bring Kush in on this and see how he's looking at this one. Kush, on Restaurant Brands Asia, the high I think was closer to 130, 135. Currently, it's at 118. Do you think a move back to that level is, anytime in the near future?
I'd say highly likely. Also, I think the question was around, averaging at, lower levels. I'm not a big fan of averaging, so I wouldn't recommend that you go out and average. However, the stock is trading in a narrow range, after, the high that you made around 135, that you said, but 135, 140 zones. This seems more like a consolidation before a big up move. But again, 140, 145 is where, a lot of supply zone is there for the stock. So there's a good chance that he may have to exit at a loss, but around 145 zones, it will be considerably less than what he's looking at now. So I would suggest hold on to this stock. A tight stop loss would be around 110 and look to exit the stock around 145, where the loss will be substantially lesser than what it is now.
All right, got it. That is the complete fundamental as well as technical view on Restaurant Brands Asia, which was earlier Burger King. The next query coming in is from Praveen Kumar Gandhi. He calls us from Bangalore and he has investments in Samvardhana Motherson International. He wants to know whether he should hold or sell this stock, currently at 72. But of course, there have been changes in the business, and that is something that we have spoken about several times here on the channel. Parthiv, let me come to you once again. Samvardhana looking good because we have been talking about this entire auto demand as. All right. Okay. Looks like we do have the caller on the line with us. Mr. Gandhi, if you can hear me, both of our guests are connected as well. Do you want to take us through your query?
Yeah, I can hear you. And I have about 1,300 plus of Samvardhana, including the bonus shares that I got. It was around 122 when I had entered 125 average. Now it's pretty bad now. I mean, it's 72 or 71. So I want to know whether I should hold on or should move into some other sector. I don't mind moving to some other sector, not necessarily auto, if I have to book a loss.
Okay. And how long are you willing to hold? Are you a long-term investor?
Yeah, I can hold it for a year or so, no problem.
Okay.
More than that?
All right. Let's ask both of our guests this question. Parthiv, what are your views on Samvardhana Motherson? He bought it at around 70. He bought it at a little bit higher, at around 83, and it is currently around 72. What do you think? He's comfortable holding for a year if that means he can, recover that loss?
See, my sense is that if the gentleman is willing to wait for a year, there is a very good potential that he can recoup his cost, and not only that, probably also add to some gains. This is a fantastic franchise in the auto insurance space, and we have seen over a period of longer horizon, over the last 10 years, 15 years, tremendous shareholder value they have created. And no doubt, I think not only the domestic side of the business, but even internationally, I think they have very marquee clients, names like Mercedes, BMW. And again, I think their order book that they're sitting on is extremely healthy. And what we are seeing is post the massive recovery that we've seen post-COVID, I think a lot of the customers, had some challenges in terms of the chip shortages. And even now, slowly, gradually, that is getting eased up. So that bodes extremely well for Motherson. And overall, I believe that over the next 6 months, I think we start seeing better numbers getting rolled out from this company. And that's why I would suggest to hold Samvardhana.
Okay, so that is the call on Samvardhana. I'm also going to ask Kush to come in. Kush, from a technical perspective, how are the charts looking on this one?
Well, not too bad considering the recent up move. The stock made a lower on 60-65 zones and then has actually turned around. But I will agree with Parthiv here on this. He'll have to spend time. The good thing is he said he's a long-term investor. He can spend about a year or a little more. Then that does make a case for him to make profits on this one. 80-85 zones where his average price lies is actually a supply zone. So the stock could spend some time in that zone. Once that is taken out, I wouldn't rule out to move up until 100. So hold on to this stock. My tight stop loss would be around 65. The recent low that the stock made, but with a year's time frame, I think about 100 is a good target on the stock.
Okay, a target of 100 with a year's time frame. That's not looking too bad at all. So, Mr. Gandhi, I hope that helps you with that complete perspective on Samvardhana Motherson. But hey, guys, welcome back. You're still tuned into Your Stocks, and we still have Kush as well as Parthiv with us to answer all your stock-related queries. So, let's get back to those. Vignesh Chandran writes to us from Calicut. He holds 400 shares of Gulf Oil Lubricants at 596 rupees a piece and 75 shares of Aditya Birla Sun Life AMC at 665. He says he's a long-term investor and he wants to know what he should do, whether he should hold these or sell. Let me come to you first on these, Kush. These stocks actually have not done much. He's losing money on both of these. Gulf Oil currently at 460 or Aditya Birla at 455. What do you think he should do on these investments?
Yeah, sadly, I can't be the bearer of good news on these ones either. I mean, the stocks haven't done well, although the immediate trend seems positive. But I'd say, Gulf Oil, if he has a slightly longer, holding period, about a year or so, he could perhaps see, the stock reaching to his, buying price. The levels about 600 are, resistance zones. But again, as I said, it'll take time. Aditya Birla, not too exciting, not even as exciting as the Gulf Oil move. I would suggest exit near 500. He'll still be in a loss, but lesser than what he has right now. So exit on both of them. Gulf Oil around 600, Aditya Birla around 500.
Exit on both of these stocks. Parthiv, coming to you, do you agree with Kush that perhaps in the near future there isn't much of an upside here?
Yes, absolutely. I do agree. And especially in case of Gulf oil, if you see the good thing that has happened is that the base oil prices have started to come down. That is very important because this lubricant space is highly competitive. There are even PSU oil marketing companies who are trying to eye and share in this. We know Castrol has become a little aggressive, trying to bring its volume mojo back. And Gulf oil has relatively done extremely well. But again, I think it's all about how the margins recoup with the base oil prices going down, and that is where I sense some sort of rally and the investor getting an exit. Talking about Aditya Birla Sun Life AMC, it's been a very unfortunate journey ever since their IPO. I think that has been a massive wealth destroyer, almost down by 25-40% from the IPO price. And again, I think no doubt AMC space has become very competitive, and thanks to the fact that a lot of positive changes done by SEBI to encourage the retail investors, the expense ratios have started coming down, and that has put an added pressure on a lot of these AMCs to manage their margins. But nonetheless, I think it's a reasonably well-run AMC, and probably with some time, I do agree with Kush that levels of 500 are reasonable in this discount.
All right, got it. That is the view on Gulf Oil Lubricants as well as Aditya Birla Sun Life AMC. And with that, let's move on to our next query. Vishwanath Pai calls us from Mumbai with a query. He has investments in IDFC First Bank. Mr. Pai, if you can hear me, good afternoon, and thank you for calling in with your query. Both of our guests are on the line as well, so please do go ahead and ask us your query.
Yeah, ma'am. Good afternoon. I have 500 shares of IDFC First Bank.
Okay.
Holding since more than 1 year. I just wanted to know the future prospects.
Okay, and I hear that you bought these shares at around 54 rupees per share. And can you tell us how long you're willing to hold these?
I can hold it for 1 or 2 years more.
All right, can hold on to IDFC First Bank for another 1 or 2 years. He's comfortable with that. He bought it at 54. This stock currently at around 63 rupees. Parthiv, let me come to you on this one. This month is actually, I mean, it's seen quite an up move this month, but take us through how you would look at it from a 1 or 2 year perspective.
See, next couple of years for IDFC First Bank, in my opinion, looks extremely good as compared to what it has done over the last 4 years. In the past 4 years, we have seen this bank facing a lot of challenges in terms of its legacy issues, and it seems that all of that has been cleaned up. Not only that, do we want credit to the management, despite all these issues, they did not stop their retail lending growth, which had been growing at almost 20% compounded. And now I think the book is extremely well skewed in terms of a very profitable, being a very profitable bank. And the NIMs have slowly gradually started improving as well. And what we saw in the last quarter, and the management has very confidently stated that now they are not expecting any sort of loan-related problems, and their focus will be on growth, improving operational efficiency, and trying to expand the ROEs and the ROAs. And again, I think they are a very distinguished bank, and really the customer feedback has been extremely strong. They have a very sticky CASA, and even the credit card business, I think they have a unique proposition there. So even if they can scale that business, I think probably a lot more value can be added. So the investor has a horizon of another 1 or 2 years. I believe levels of 80, 100 are possible in IDFC First Bank.
All right, so sounding quite positive there on IDFC First Bank. Kush, coming to you, how do you look at this one? It has been in an uptrend, recently. This month has been quite good for this stock.
In fact, if I start from somewhere around late June, early July, the stock's been in a secular, uptrend. Hardly any dips of concern, and all those dips have been bought into. The kind of volume action that we are seeing, the kind of up move we are seeing, it's a steady, gradual one. It's a very encouraging sign because rather than a breakaway, you would want a gradual up move in the stock, and that's exactly what the stock is showing. From a technical perspective, 75 and 80 is where I see the stock in the next year's time frame. From an investment strategy perspective, the stock's trading fairly above its buying price. So I would suggest have a trailing stop loss around 54-55 zones. Even if the stock were to dip, he'd still exit at cost or at marginal profit. It doesn't seem to be the case. The more likely scenario is a 75-80 kind of a level in the stock by the end of the next year.
All right, so you could see this sort of move higher as well. Mr. Pai, I hope that helps you. You've already made good money on IDFC First Bank, but both of our guests do believe that you could see significant gains if you hold on for that period that you have of 1 to 2 years. The next query coming in is from Ranjit, who writes to us from Bhopal. He holds 20 shares of Laurus Labs at 505. So this one has seen quite a knock since then. He is a long-term investor and he wants to know whether to hold or sell. The stock is currently closer to 400. Kush, coming to you on this one, how do you feel about Laurus Labs? And, if not this one, would you recommend anything else within the pharma pattern?
Well, first up on Laurus Labs, see the stocks. We all know what kind of journey the stocks made, right? From 600, right, until under 400 right now. The only case that the stock is making for itself is a technical bounce from an oversold territory. I wouldn't rule out 430, 440 kind of a move, and that's purely on a technical bounce. Otherwise, the charts look very weak on this one. That would be perhaps a better exit point for him. His buying price is way higher. As far as the other stocks go in the pharma space, a lot of stocks had been doing well, but the only couple of them that could sustain a rally were Sun Pharma and Cipla. And out of that, Sun Pharma still looks like a good bet. We've seen a bit of a cut on the stock, but that's turned out to be a buying opportunity in the last couple of days. So a fresh entry on Sun Pharma would have 970 as a stop loss. The first target would be 1020 and the second target would be 1070. So that's an alternative that he could switch to if he wants to exit from Laurus Labs.
All right, so maybe exiting Laurus Labs is a better call. That is the view coming in on Laurus Labs. Kush, thanks a lot for that. In fact, Kush, Parthiv, I'm going to thank both of you on that note because we're completely out of time on this edition of Your Stock. So thank you very much for joining us and taking out the time. For the markets, we are off the highs, but it's still around 40-point gain. What's really encouraging is that the mid-cap space is holding up just fine. It's 0.8% higher for the mid-cap index. Thanks a lot for tuning in. And remember, you can keep sending us your queries and we will take them up with our experts. Stay tuned. Closing bell comes up next.